Hello, everyone. This is the Free American Press with your host, AlexanderHorat. And before we begin, if you could please subscribe to the channel and leave a like on the video, that would be great. Today, we're having Lynette Zang on the show, and Lynette Zang is an economist that has been involved in the markets at some level since 1964 as a student banker, stockbroker, and precious metals and currency analyst. She has been studying currency life cycles since 1987 and discovered similar social, economic, and financial patterns that occur throughout the stages of a currency's lifetime. Hello, Lynette. We're really thankful to have you on the show.
Well, I'm very happy to be here, Alexander. Thank you for having me.
Yeah, that's great. So, Lynette, what geopolitical event right now poses the greatest threat to the US dollar's dominance?
Oh, wow. Well, it's already done. And geopolitical, look, the patterns of there being a lot of war and chaos around monetary shifts is it's something that happens 100% of the time. So kind of look around the world and take your pick because there's a lot that's going on. It's not just one place, it's pretty much every place, isn't it?
Yeah, that's true.
And even if you look, I mean, there are people that know more about cyberspace than I do, and they've been telling me that we've been in World War III for a very long time. But we, the public, can't really see that. And so honestly, politicians need boots on the ground, visible wars, because that's what we can see. That's what can justify the expansion of the military industrial complex. That's what can justify inflation. That justifies a lot of stuff. Is it necessary? Probably not. But
Yeah, that definitely makes sense. They're definitely growing the military industrial complex every day and inflating the dollar away. So, with physical shortages in gold and silver increasing and BRICS moving towards the gold-backed settlement systems, what role do you think the LBMA will play going forward?
well, that's a really good question. Especially, I want to throw the Bank of England in there as well, because their stores of both physical gold and silver are substantially lower than they were not even a year ago. So, will there be a default? I mean, that's going to be like a huge fireworks. And I particularly bring up the Bank of England because they shipped an awful lot of gold over to the U.S. in the beginning of this year, and they don't own a lot of gold. So, whose gold are they sending over? And what happens when those countries ask for their gold back and the Bank of England doesn't have it? So, I think those fireworks lay yet ahead, but I think it's much bigger and broader than just the LBMA.
Yeah, I definitely think that's true. So, is the COMEX close to losing physical control of gold and silver?
It's not so much the physical control, it's the contract control. And I'm so glad that you brought this up because we are absolutely inside of a structural shift in how gold and silver are actually priced in this market. And here in the US, it's primarily a contract market, and the level of the contracts is so huge that it's been dictating the price. But to your earlier point, there is a shortage of both physical and gold uh, to the level of contracts. And so, starting just recently with the backwardation in the metals, it really started in January when they shipped over with somebody with a fat finger shipped took delivery of all of that gold and silver. So that was really more the beginning of it. And then with the backwardation, that was a signal that the pricing mechanism is shifting. And then just recently, I was looking at ETF flows, and the flows have been, according to gold.org, the flows have been out of the system, and yet you still see the spot gold, the contract market, making, well, not new highs at this point, but toward their all-time highs. Whereas normally those ETF sales would have put price pressure downward on that spot market. So to me, that is an indication that the evolution in pricing, that the structural shift in pricing the metals is well underway. All of those things tells me that there is a shift that's occurring, and ultimately it will be a supply and demand dynamic for the physical metals themselves that will start to actually show fair pricing.
Yeah, it's definitely true. We definitely see gold and silver manipulated, and that's a huge problem. So, do you believe we're near a reset moment where physical metal is revalued?
Well, it's all relative. Timing is relative, right?
Right.
So the answer is I do see that in the near future, but we still have some stages that we're going to have to go through first. We're going to have a complete loss of confidence. And so I pay a lot of attention to consumer sentiment, consumer confidence, and because it keeps bouncing off the low. But when I see a breakthrough to that low, to a new low, then for me as a technician, it will indicate that we have now gone to a much more significant level in that loss of confidence, because this whole fiat money system is nothing but a Ponzi scheme. And every Ponzi scheme always needs new money, which we're at maximum levels in debt. Not saying they can't grow more, but maximum levels in unpayable debt. And they need they need confidence. And since 2008, I saw bank-to-bank confidence go away, as witnessed by the interbank lending, which they don't even report on anymore. So banks lost confidence in each other. Central bank to central bank confidence gone in 2015 with the Swiss surprise. And I can go into any of this in more detail if you want me to.
Oh, please do. That would be great.
Well, okay, but it might kind of derail the conversation. But the Swiss surprise, there was a period of time similar to what we experienced here in the US with the variable rate mortgages. In Europe, the Swiss franc was cheaper than the euro. And so people in Europe, a lot of people in Europe, took out mortgages in Swiss francs because it was cheaper. Their monthly payments were cheaper. But then the Swiss franc pegged to the euro. So whatever the euro did, if it went up or it went down, the Central Bank of Switzerland was obligated to support that currency, the Swiss franc, at the same level as the euro. But it was costing them a lot to maintain that peg. So through the IMF, the International Monetary Fund, which every central bank chief and every treasury secretary is part of, pretty much almost, they vowed and vowed and vowed and vowed and vowed that their highest priority was maintaining that peg. And 2 days after they came out with that highest absolute priority was maintaining that peg, they depegged. In other words, it's called the Swiss surprise. You can go in, you can search it out. But there were a number of companies that went out of business. But the point of that whole thing was what the central banks learned. Up to that point, they had been doing everything in lockstep in a very coordinated way. You may recall that, or some of the viewers may recall that. Well, then central banks discovered that they cannot count on each other to do exactly what they're agreeing to, that they will do what's in their best interest first. So that was the second significant layer of confidence. So now we've lost bank to bank and central bank to central bank. The next one, frankly, really surprised me. And that was when the market confidence to the central banks, because since 2008, central banks have been using forward guidance to tell the banking system what they were going to do so that they could get into position to make money on it, get into the right position for it. And so leading up to an interest rate increase, the Federal Reserve, the ECB, the Bank of England, so the key central bankers had all been saying 50 basis points move, a 50 basis point move, a 50 basis point move. And then at the nth hour, without any warning, they did, bam, a 75 basis point move, which may or may not seem like a lot to you, but when you're positioned for 50 and they do it at 75, That's a problem. And by the way, that's still a problem that exists because this is my sterling silver chopstick. What that really did too, we had 15 years of zero interest rate policy, right? So it's zero interest rate policy. If this is a bond, this is interest rates, this is when it was issued, and this is when it matures, right? When interest rates go down, the market value of the outstanding bonds go up. So you can hide a lot of stuff with that. But when interest rates go up, the market value of the bonds go down. This is so significant. People do not realize we still have all of those negative bonds in the banking system, including in the central banking system, and not just in the US, but on a global basis. And so what that actually means, I mean, the Federal Reserve has not turned a profit. We're now in the 5th year. And they have an easy way to turn a profit because they just create money. And the difference in the cost of that money to create and the face value of the money is their profit. So how in the world are they losing money? But that's another discussion for another day. Having said that, what we have is we have zombie governments because that debt is unpayable and all they want to do is grow more of it. We have zombie central banks because of all of the government debt and other debt instruments that they are sitting in that are way underwater. And I'll put the banks in that same category. They can't afford to run because then they'd have to liquidate. Well, they'd halt it. But if they didn't, they would have to liquidate these undervalued bonds, which would make them even more undervalued and just exacerbate the problem. But so then it was in 2002, it was the markets realizing they could not count on the forward guidance of the central banks to tell them what they were going to do. There's only one layer left, and that's public confidence in this crap and in those that are managing this crap. And rapid inflation erodes that confidence. So if central banks, their real job is to manage the rate and speed of that inflation. So if they lose their ability to do that, I mean, and a lot of people, I mean, look, you've got families that have to buy their groceries on 4 easy payments.
Yeah,
You
it's
have,
crazy.
I mean, what does that tell you? People lose confidence when they can't feed their children and they're making more dollars. The problem is not that those things are worth that much more. The problem is that the dollar, the euro, the yen, take your pick, is worth that much less until it has zero value. And it only has 3 cents officially.
Yeah, that makes sense. Everything you said there made a whole lot of sense. I think the debt is getting out of control. So at 35 trillion plus dollars worth of debt, is the US already past the point of no return? Is hyperinflation a realistic scenario?
It is an inevitable scenario because the new monetary system that they did just put in place when Trump signed the Genius Act and legalized stablecoins, it was to create an artificial market for dollars. And corporations, any corporation can really issue those stable coins. So it's also going to be a very fragmented market. But really, what's going to justify, this has been my question for many years and it was finally answered, right? What's going to justify new money creation? In the current system, it's debt that justifies that, right?
Yeah.
Just grow more debt, take on more debt, whether it's a consumer debt or corporate debt or government debt, whatever, all that debt creates more dollars. In the new system that was just legalized, it is your purchases that are backed 1-to-1 with dollars that then that corporation has to turn around and buy treasuries. So what President Trump is attempting to do is to create a new artificial market for dollars and for treasuries. part of the challenge is the stability of the hands that it's going into. The other part of the challenge is there is no doubt in my mind. This is my opinion. I could be wrong, but I've lived through currency changes before in the past. I'm very glad to be as old as I am, to be honest with you. And there's really no doubt in my mind, but that the Stablecoin Act is what's going to usher in that hyperinflationary depression that we have to have so that that debt can be repaid with dollars in this country that have zero value, and we can start cleanly in a new system.
Yeah, that makes real sense that they would just inflate the debt away rather than repaying it.
But they can't repay it.
Yeah, it's
You
true.
know, they can't, it's not possible. And it isn't suddenly that it's non-payable. I did a study in 2009 because at that point, and if you, my favorite website is the Federal Reserve Education Department, the Fred. And if you go in there and you look at the deficits and the surpluses, what you'll notice is that in 2008, that was the very first time that we ran $1 trillion deficit. And, you know, we even had a little, I mean, it was an accounting thing, but we even showed a little bit of a surplus during Clinton. And yet at that time, we were servicing 13 trillion in debt. And I said to myself, well, wait a minute. If we've just suddenly really been running this ginormous deficit and the rest of them hasn't been that bad, why are we servicing 13 trillion in debt? Well, at the Fred, you can go back and into the spreadsheets of all of that data. I encourage everybody to go there. It's a really interesting site. And so I went in there and I started looking, and what I discovered is that they had not been paying all the interest on the debt that they'd been accumulating. Think of it kind of like a credit card. If you are not paying all of the interest on that credit card, that interest that you don't pay then goes into the principal.
Yeah.
And now you are paying interest on the interest. So you are compounding it. And that's exactly what we've been doing for a very, very, very long time. I did send my work to an accountant because I am not an accountant. That is not my thing. And I said, am I looking at this the right way? Because I never want to give misinformation. And he's like, nope, you're looking at it the right way. So really that debt hasn't been payable. And understand, the intention never was to pay that debt off, because that would take money out of the system. And it's a Ponzi scheme. They need money going into the system. It all implodes when it goes the opposite way, which is why this is such a rush, because we're at the end.
Yeah, definitely. I think there's going to be hyperinflation, like you said. So, do you think it's a good buy for someone to buy a house and get in debt, but that's that 30-year mortgage and it getting paid off with basically the debt going away because of inflation?
I think that there's a couple different ways that I feel about real estate. Number one, you have to have a place to make your last stand. So, you know, you have to have a roof over your head. You're not going to be camping. So if you do not have a place to make your last stand, then you need that. And the strategy is the same as the government strategy, that when you take on that mortgage, at that same time, you buy enough gold at the fundamental value so that when they do that overnight reset and they take gold, that is the primary currency metal that is all intrinsic value, since it is used in every single sector of the global economy. That's why it can't be inflated away. And they take this garbage and that has no intrinsic value. It's used in one place and it doesn't even cost anything to create. And they revalue gold against that. And that is when gold begins to go to its true fundamental value. That overnight reset is when I would take what might take me 10 ounces of gold to do right now. When that happens, because like in Venezuela, overnight it went up over 3,500%. it might take me a 20th of an ounce, right? So then I will liquidate however much gold I need to, bam, pay that mortgage off. So that is a very viable strategy that can put you in a much better place, because my mantra is that you need to have surety in food, water, energy, security, barterability, which for me is primarily silver, wealth preservation, which for me is primarily gold. You need to be surrounded by community that brings in all the different skills and tools that they have. You come together so that there's power in numbers, and then there's that shelter piece that we're talking about. If, however, you're speculating, then real estate is a horrendous place to be, because even if you have the house paid off, you're always going to have to pay those property taxes. And as we see, especially with what's happening on the political front with the new socialist movement that was born out of 2008, there's all this talk about rent control. I got
Right.
news for you. I've got to get in front of these people. I hope if anybody knows anybody that's a socialist, a new socialist, get me in front of you, because just like I saw in 2008 with the global Occupy Wall Street movement, they didn't understand what the real fight is. The real fight is not controlling the rent. The real fight is controlling the value of the money.
I
Because if
agree.
you've got that controlled, you don't have those issues with rent, nor do you have issues with your income.
Yeah, that's definitely true. I think the rent control, people are going to be in a bad place. It's going to be hard to have investment property if your rent is capped. You're not going to be getting the money out of it that you put into it. So that's definitely a huge problem there.
Yeah, and we saw this in 2020 when they put rent control in and people couldn't collect it or whatever, but the owners, the taxes, the utilities, the maintenance, anything that they did cost them more, but they couldn't charge more. So it is not rent control, it's money control. And that takes me to my biggest battle, and the one that I fight for on a daily basis as a member of the Citizens for Sound Money movement.
Yes, they're great. I know them. Yeah, I
Awesome. Yep. Well, I sit on the advisory board and we work together on things, but we've got to get redeemable gold back in the monetary system again. Because redeemable means if I don't like what the politicians are doing, I can say, okay, give me my gold. And what gold does inside of a monetary system, it forces fiscal responsibility. But like we've seen with Zimbabwe, who created the Zim gold, it was not physical or redeemable. And they started the Zim gold in April and they revalued it 44% in October. If it was redeemable, they could not do that. So it was just, if it's not redeemable, it doesn't mean anything, nothing.
I agree, and I don't think the people will trust that. I think that's just a lie to get people into that movement, saying it's backed by gold, but
Exactly.
you're not going to get it back though. So that's definitely true. So that's great that you're on the Citizens for Sound Money board. Have you heard of the Missouri Constitutional Money Act that was passed this year?
I have, yes.
So what are your thoughts on that?
Well, look, I don't think anything is exactly perfect, but it's a move in the right direction, and it gives me a lot of hope, particularly when I saw the laws around cannabis changed because the states were supporting it so much. It forced the federal government's hands. And that's how I view this. I think it's critically important on a state by state level to legalize gold and silver and take that taxable event away from it. I'm not keen on a number of the states wanting to have it primarily digital, because I think it always needs to be redeemable. So I think there's good and there's bad, but I like to see positive movement, because even if there's some bad in there, it still gives us something to work on.
I definitely agree. The bill is definitely not perfect, but it is a step in the right direction.
Step in the right direction, and that's all we can ask for at this point.
Yeah, I agree with that. So getting on to a little bit of different topic, how do you think the recent government shutdown, the longest in U.S. history, has impacted global confidence on the U.S. dollar?
I think it's I think the world knows that the US is not the superpower that it once was, but let's take that maybe one step further because what I hope people learned when they saw that food, the social security net removed from people, I think people have lost a lot of confidence in the government. And it's not just the US dollar as the world reserve currency, it's also that public confidence in the Ponzi scheme. And I also think that looking at the government shutdown and all of those furloughed workers, when there was a question whether or not they were going to get their back pay, I mean, I don't think that we have actually felt any of the ramifications of those shutdowns quite yet. I think some people do, but there's also a trickle down. And for those furloughed workers, were they able to make all of their bills? We're seeing car payment defaults at the highest levels again. We're seeing mortgage defaults go up, student loan. I mean, on a this whole thing is held together by confidence. So what's happened is that confidence has been shaken to the core.
Yeah, I definitely agree, especially for federal workers who didn't get paid. That's definitely work, and I don't think they can expect people to work without pay. I think that's
But that's what happens in hyperinflation,
yeah, that's true.
right? That's exactly what have teachers, firefighters, police officers. So you lose a lot of services, your taxes must go up. And in the meantime, this is also brings into why local community is so critically important. And we have to grow that because that's our safety net. And I think a lot of people realize during this government shutdown, there ain't no safety net. There's no safety net. You have to become as independent and self sufficient and do it inside of community because there is power in numbers.
I definitely agree. I think people who focus on the national government changing that, or even the state government for some instances, you can't make a change, but in your own local community, you can make a good change for the better in protecting yourself. So I think that's really good advice that you gave.
Yeah,
Uh,
it's a grassroots effort, right? We've got to start from the bottom up. We, the public, need to take our power back. If you do nothing, you need to understand that that is your vote, that you will be inside of a full surveillance feudal economy, because that's what they want. But there's 1% of them that are controlling the 99%. If we can get 3%, well, guess what? That's a lot more than the 1%. I believe we have a shot. That's what I'm battling for. And not for me, because I'm old. You're a lot younger than me. I have children in their 40s. I have grandchildren that are younger than that, obviously. And someday they're going to have children and on and on and on. So we have to do this for those that are here now, but for those that are moving into the future. We have to do this. We don't have any choice.
I definitely agree with that. I think we need to do something for posterity, and I think that we'll be remembered for doing it and doing something good, not something bad like they're doing to us and giving us an inflation time bomb. So back to the government shutdowns. Do you think we're going to see another one in January? And if
I
so,
think we
how
got a shot.
yeah, okay. Sounds so how much gold and silver should an average American realistically hold?
Well, look, I've studied currency life cycles since 1987, and there is no one blanket answer. So if you're, and we've developed a sound money strategy. And so the first thing we do is we establish your goals. What's your current cost of living? And we lay in a barterable um, portfolio for that. And that would be fractional gold, fractional silver, a level of cash, even though, yes, it's going away, but that's still going to be recognizable. Maybe even some gold backs. So this is a bill that this happens to be a $1 gold back. There's a thousandth of an ounce of gold embedded in it, maybe even some digital gold like Kinesis or Glint, because those are redeemable. I wouldn't touch it if they're not redeemable, but those happen to be redeemable for a small portion of that, but it's based upon your current cost of living and certain different levels of liquidity, okay? Then the next thing we look at is what fixed rate debt you have, and we determine, well, how much gold do you need to pay off that mortgage in an overnight revaluation circumstance? And then we also look at what fiat money and tangible wealth you've managed to accumulate, and we want to make sure you're properly diversified to protect that. And then it's very comprehensive, because right now we know that fundamentally gold is severely undervalued. The other income producing assets are severely overvalued because they've been targeted for reflation. That's going to flip flop. So we want to put you in a position to take advantage of the opportunities that arise as we're going through this transition. And then ultimately, if it's a priority for you, it is for me, but it's not for everybody, to leave a legacy. So have some kind of gold that just remains in the family from generation to generation. Kind of think about the Queen of England who passed on, right? Dynastic wealth is wealth that lasts in families at least 300 years, and it consists of three legs: real estate, truly rare collectibles, and gold. And you can do all three, frankly, with gold. So it's very comprehensive, but we put what you're trying to accomplish first, and there really is no blanket answer for, well, how much should I have? But we can help you determine how much you need to have to perform whatever of those functions that you're trying to perform.
Yeah, that's really great that you offer that service, and I definitely think gold is a low deal. Like it's basically you're not having the hidden tax of inflation on it every day. So I think it's something good to have strong in your family line. So I think that's a great idea that you talked about. So how long before the U.S. dollar is no longer the world reserve currency? Do you have a estimate year timeline on that?
Well, that really kind of started in 2000 when they developed the euro, because the euro was created to take over from the dollar as the
Uh,
world reserve currency. And we've gone from, I think, don't hold me to this because obviously I don't have the numbers in front of me, but I think we went from about 85% of the dollar being in reserves. And the last number I saw recently was 49%. So it really has already happened, whether we realize it or not. And the other thing that I would really like to point out is the International Monetary Fund, the IMF. They created their currency. It's called an SDR, which stands for Special Drawing Rights. It's just a name. It doesn't really mean anything. Back in 69 to take over as the world reserve currency from the dollar back then.
mm.
But Henry Kissinger, and I remember this because I was around then, Henry Kissinger went and created the petrodollar and therefore created that artificial demand. And again, that's been waning really since 2000. And in fact, I just did this yesterday, and I'm happy to send you these charts. Most Americans don't realize this, but in the 60s, and you can see it, there was a run on the dollar with foreign governments sending in dollars and pulling the gold out of the system. By the time Nixon took us off the gold standard, we had less gold in deep storage than we did prior to the confiscation in 33. But today, if you look at it, we hit peak participation in our treasury debt market in 2008. And particularly, this is sped up with the largest buyers of our treasury debt being China and Japan, really whittling away their holdings. And when you look at that chart, and if you compared the run on the dollar in the 60s to the run on the dollar today, and then you could overlap the two of them. So quite honestly, I would say that that run and that loss of the world reserve currency status started in 2000, escalated in 2008, and again in 2013. And the IMF, back when they created the SDR, also created what they call a substitution fund. So globally, even that 49% of dollars that are in the system, if they needed to transition out of dollars into whatever the next world reserve currency is going to be, which I personally think is going to be the SDR, we can talk about that in a second. All they have to do is send in their dollar denominated holdings, whether they're bonds or notes or whatever they might be, put them in the substitution fund, and then the IMF, bam, converts them into SDR denominated instruments. And that would be highly inflationary for the US because there wouldn't be as great a demand. That's why it's such a big deal that President Trump signed the Genius Act in an attempt to create another false market for dollars and dollar denominated debt. But the SDR is a basket of currencies. Every other country has to create debt in order to create the currency. If you hear them say, well, the IMF has the cleanest balance sheet, it's because the rest of the countries donate their currencies. So the IMF doesn't have to take on debt to create the SDR. And it's a basket of currencies of which there are no limitations. So the IMF has been working on a universal currency, which is like an umbrella, and it could indeed contain every single currency on the planet. So as a universal currency, and then it would just easily translate to local currencies because they're not going to change the name. Because if they change the name, you know something's different. But if they keep it a digital dollar or whatever, you go, oh, well, nothing much has changed. Okay. Well, actually, everything will have changed.
I definitely agree. I think we're definitely moving towards the digital dollar. So if you could give one warning to the public for the next 24 months, what would that be?
Call us. Get your sound money strategy in place. Develop that local community. Convert your garbage fiat into sound money and demand redeemable sound money back in the market again. If you do that, that's your vote. This is my vote. So that's what it is. Get that community developed, get your own sound money strategy in place, learn some new skills, and then be prepared.
I think that's definitely important to be prepared. So where do you see the price of gold and silver by the end of next year?
Oh, crap. It could be anywhere. I mean, I don't really think of it too much in terms of dollars, but it would not really, by the end of next year, it would not really be surprising for me to see the spot gold market at somewhere around 6,000 bucks. I think that'd be easy peasy. It could even be higher than that. I mean, it's really interesting to listen to all these Wall Street talking heads coming out and saying that there's going to be a big correction in the markets and AI. And, interestingly enough, I just heard this morning, very interesting, that the Mag 7, so all those tech companies that are basically a huge part of market moves and held everywhere, is also at the same time the most heavily shorted. So they're the most held and the most shorted, meaning that they've been sold even though they don't own those shares for delivery. I don't know that I've ever seen that in my entire career. I don't know that I've ever seen that before. That has me a little nervous. I'm not going to lie, but they're trying to prepare us just so they can say, "Well, we told you."
All right, that's true. I told you so. That's definitely what they're preparing us for. So I was looking at your website and I've seen that will be having a marketplace coming soon. Can you tell the viewers what your plans for that may be?
Well, that gives the clients the ability to go online and do some smaller purchases themselves. We'll also be doing some other things online in our marketplace with things like travel jewelry and things like that. So I'm very excited to finally have it up and running and the whole website up and running well.
Yeah, I definitely think that's great. If everybody can check out Zang Enterprises and her website, LynetteZang.com. And she has a really good site and she does YouTube videos on her YouTube channel. And she also has an X account. Is there anything else you'd like to say about your website or anything else you'd like to cover?
You know, what I can tell you is I am so proud of who we are because I can honestly say that everybody at Zang Enterprises really wants to make a positive difference for a lot of people. So we love community, we love face to face. We are absolutely committed to concierge service. Our minimum, I'll even tell you, we believe in it so strongly that our minimum is 1 ounce of silver. One.
Oh, that's good to know. Yeah, that's a great minimum. Well, I'd really like to thank you, Lynette, for being on the show and providing all this amazing insight to us. And I just hope we can have you on the show in the future.
I love that. Thank you so much, Alexander. It's been a pleasure being here.
Well, I appreciate that, and I appreciate all you, the viewers who watched. Please subscribe to the channel and leave a like and share it with your friends. Thanks again for watching. Goodbye.